Can you guys believe it is already September? I can't. Summer went by way too fast. But come September, things start to get a little bit interesting in the Forex market. And that's exactly what we're going to be talking about today. Hi guys, welcome back to another video. If you're new here, my name is Matt L. And I'm a full-time Forex trader living in Montreal. I hope you guys had a good summer. I don't know about you, but mine went by way too fast. I did some fun things. I went to a cottage, hung out with some friends, went to a water park. That was pretty fun. And of course, I have been trading. But as most of you know, trading in August is pretty boring. The first 2 weeks were incredibly boring. The third week, there was actually a fair bit of movement. You guys would know that if you watched my Forex Friday video. Shameless plug. But now that we're heading into September, people are going to start thinking about the end of the year approaching, and that's going to make the Forex and the stock market very interesting. So in today's video, I want to go over what September seasonals look like. And for those of you that don't know, seasonals are typical trends that we see in each month throughout the year. Every month is a little bit unique in terms of what the seasonals predict, but there's absolutely some patterns that you should keep in mind. So we're gonna go over those. And then we're gonna talk about what the heck is going on in this crazy world of ours. What should we be looking out for and thinking about as we move into September in terms of our trading? What is going to move the markets? You need to know these things, I need to know these things, because at the end of the day, we just wanna make some money.
We're taking home cold hard cash via commission, motherfucker. Right.
So that is what we're gonna be talking about. So if that sounds awesome to you, grab a cup of tea and let's get into it. First things first, we're going to talk about seasonals. Now, September is typically a pretty seasonals in September don't typically tend to be very strong. September doesn't have the strongest seasonals out of the year, but there are a couple things that do happen every year. And that is that stocks don't tend to do very well. Since 1990, September is only one of 4 months that have averaged a decline in the S&P 500. So I think that is something that's important to keep in mind. The reason for this is that a lot of traders, institutions, banks, they go away on August, and that puts the market on autopilot, which is why seasonals in August tend to be very strong. But things change in September because people return to work, and as I mentioned, they start to think about what is going to happen as we approach the end of the year. This shift in mindset shifts the perspective and the thinking in banks and institutions, and they start to position themselves for the end of the year. So depending on how the markets have moved up to this point, they're going to want to rebalance their portfolios and their positions to better prepare for the rest of the year. So that is why seasonals in September don't tend to be very strong. However, the stock market does tend to drop. So keep that in mind if you're trading stocks, but also in terms of Forex, this will drive risk sentiment. The stock market is at all-time highs, and if we do start to see a drop, that is going to heavily impact risk tones and risk sentiment, and we'll see a sell-off in the Aussie and New Zealand dollar, and probably a stronger US dollar, as well as the yen. So keep that in mind. Now we're going to talk about what is going on in the world. We have 1 month to go until we're in the last quarter, and there's still a lot of things happening in the world that could and will impact markets. Now, I know all of you, including myself, are super tired of hearing about it, but that is COVID. And I think that as we move into the fall, COVID is going to continue to play a massive part in how we foresee the economy developing and different countries reopening. More specifically, we're going to need to look very closely at how countries deal with the fall, and with the fall, the inevitable rise in cases. On top of that, we're seeing more and more information that the vaccines aren't as effective as they are initially. So the longer somebody goes after being vaccinated, the effectiveness isn't as strong. We're seeing this out of Israel, which was the #1 vaccinated country originally, and their cases and hospitalizations are starting to rise. So I think this is going to be absolutely critical to keep an eye on. If the vaccines prove to not be as effective in the long run, are there going to be more lockdowns? And on top of that, what's going to happen with the vaccine mandates that some countries are implementing? Are they going to be effective? Are they going to be implemented? And how is that going to impact businesses in the short and the long term? All of these things we need to keep a close eye on because they're going to, again, drive risk sentiments. So keep your eyes on that. Now, all of these things that I just mentioned are of course related to central banks and their economic outlook. The second thing after COVID that is the most important thing to look at is the rhetoric that is coming out from central banks globally. The question is, are central banks going to increase interest rates? And if so, when? We're starting to see central banks become more and more hawkish, not overly hawkish, but just less dovish. And this is going to drive markets, and markets are going to be watching this incredibly closely. If we do see rates begin to start increasing, we're going to see a sell-off in stocks initially, and we're going to see a stronger US dollar. And depending on which country hikes rates first, we're going to see that currency strengthen as a result. But it's possible, depending on how COVID unfolds, that maybe we won't see any rate hikes this year, but that is something that is crucial to keep an eye out for. The last thing that I want to mention and talk about is the shift in focus from COVID to economic data. Now, of course, as I said, COVID is still the number one thing that we need to focus on, but very slowly we're beginning to see economic data become more relevant and more important. The market is starting to react more and more to unemployment figures, retail sales, and the sort. So it's important as a trader that we begin to look at this data and what it means. Most of the data that I mentioned and that is high impact is going to be a leading indicator for central banks to increase rates. And if they do increase rates, all of those things that I just mentioned will happen. So it's going to drive risk sentiment and it's going to drive stock markets, which of course will impact the Forex markets. The last thing that I wanted to mention about COVID is whether or not we're going to see more lockdowns as we move into the fall. If Australia and New Zealand are any indication as to what's to come, we might be in for a pretty ugly fall and winter. But of course, this is not a foregone conclusion and absolutely anything can happen. So those are the main political and global things that I really think that we need to keep in mind as we move into September. We're going to need to look at these events closely and see how they'll impact risk sentiment. It's my firm conviction that risk sentiment will continue to be the leading driver of markets. People are feeling optimistic or pessimistic on the COVID situation and just the global economy as a whole. That is what we're going to need to watch out for, and that is what is going to drive markets and hopefully will allow us to make some money. So I hope all of this has given you a few things to keep in mind as we move into this new month. It'll be interesting to see how this month unfolds as we slowly step into the last quarter of the year. I wish you all a very good month. If you're heading back to work, good luck. I had that series coming out this month, 1 episode a week, where I'll be talking about and sharing my full strategy on how I passed 4 FTMO challenges. So I look forward to posting those, sharing them with you, and helping you all get funded on your own journey. If you made it this far, as always, I appreciate it, guys. You have my gratitude. I'll see you in the next video, and until then, peace.